So, if you've walked past a gold souk in Dubai lately, you might have felt it. There's a certain buzz in the air, a tension in the market. And it's all because the price of gold has been on an absolute tear. All right, let's dive right in and unpack what's really going on behind this glittering price surge.
First things first, let's just look at that headline number. On Friday, February 27th, 2026, the price for 24-karat gold hit a staggering 626 dirhams per gram. Now, that's not just a high price, folks. That is seriously close to historic levels. It's got both shoppers and investors on high alert.
And that really brings us to the big question, doesn't it? Why is this all happening? And why right now? Is this just some temporary blip on the radar, or is it a sign of something much, much bigger happening on the world stage? Well, let's break it all down.
To really get it, we have to look at how we got here. See, this price surge wasn't just some random overnight spike. Nope, it was a steady, month-long climb. Let's take a look at the story of the February rally.
This timeline really tells a fascinating story. You can see it started with a pretty sharp dip early in the month, but after that, it was just a relentless upward march. You see it cross that key 600 dirham barrier right in the middle of the month, and then just keep pushing, blowing past 620 in that final stretch. The momentum had been building for weeks.
So what's pouring fuel on this fire? Well, the answer isn't actually in the local souks. It's on the global stage. What we're seeing is international uncertainty, and that is the #1 thing turning investors towards the safety of gold. And this gets us to a really key idea, the safe haven asset. Basically, when the world feels unstable, investors get nervous, right? So they pull their money out of riskier things and put it into stuff they believe will hold its value no matter what. And for centuries, gold has been the ultimate safe haven. And boy, right now, there is no shortage of uncertainty. We've got two huge factors at play. First, those really delicate, high-stakes US-Iran nuclear talks in Geneva. And second, a pretty significant American military buildup happening in the region. Both of these things are keeping investors on edge, and that means demand for a safe haven is very, very firm. But here's an interesting point from market analyst Lynn Tran. She's suggesting we're not really in another wild surge. It's more like the market is stabilizing at these new, higher prices. The risks? They're still there, for sure, and that's keeping the price floor high. But they aren't actively getting worse, which is what's stopping an even bigger price explosion. And listen, this isn't just about individual investors getting a little nervous. No, this demand is being powerfully backed up by major institutional players. We're talking about the big money here. To get a sense of the sheer scale of this, just look at the SPDR Gold Trust. It's a massive fund. In just 3 days, it bought nearly 19 times tons of gold. I mean, that is a huge vote of confidence from the really big players. They're actively hedging their bets because they believe the risk is real, and gold is the answer.
Okay, so if demand is that strong, you might be asking, why hasn't the price gone even higher? Well, there's a powerful force pushing back in the other direction, and it all comes down to interest rates.
Think about it this way. When interest rates are high, you can earn a pretty safe return just by parking your cash in a bank account. But gold, it doesn't pay you anything. It just sits there. So as rates go up, cash starts to look more appealing, and holding on to gold becomes, well, a little less attractive by comparison.
And this all connects directly to what's happening right now. The analysis points out that with U.S. inflation still running hot, the Federal Reserve probably isn't going to be cutting interest rates anytime soon. And as long as those rates stay high, it kind of acts like a ceiling, holding gold back from another major breakout despite all that geopolitical drama.
So you've got these two powerful forces, right? Geopolitical fear is pushing prices up, but high interest rates are pushing them down. So where does the market go from here? Well, the general thinking seems to be a period of stability.
The expert outlook here is pretty clear. The most likely thing to happen next isn't a crash, but it's not another massive rally either. Instead, we can probably expect the price to consolidate, basically to trade sideways for a bit, just below its recent peaks. The market is kind of catching its breath.
So what's the bottom line here? It's this. Don't expect prices to suddenly drop back to where they were at the start of the year. This new, higher price range seems to be the new normal, at least for the time being, as the market tries to balance all that risk and return. And all of this leads to a final, much bigger question. In a world where uncertainty feels like the new constant, has gold's role shifted? Is it no longer just a temporary safe haven, but now an essential, permanent shield in any financial strategy? Now that's the real question to think about.